Hi guys, Angie on bonds. It's been a minute since I did any YouTube video, but I hope you've been following me on my social media platforms on TikTok and IG and Facebook under the name Angie on bonds, where I've been updating you on what's happening in the bonds market weekly. If you haven't followed, just check out the pages and get to know what's happening. Also, we now finally have the digital app by CBK where you can open your account and buy bonds digitally. We've been waiting for it for a very long time. It's finally here, and I hope you've been able to open your account. You no longer need to go to CBK to do that. If you're having any issues, get in touch with CBK. They have very good customer service and they're really helping out on the whole process of opening and settlement. Get in touch. Let's talk about prospectus. What is a prospectus? So this is a document that has all the information about any particular bond. It's usually announced or issued every time there's a new bond. It could be a new bond or a bond reopening, but it gives all the details that you need to know about any particular bond. So when is a prospectus issued? Remember, the bonds are issued every month. It could be a new bond or a bond reopening. That is an old bond that is just being reissued. And every time that happens, we receive prospectus that gives details on how those bonds operate, the details about the bond. So yes, every month we receive a prospectus. So how do you get a prospectus? On the CBK website, you're able to retrieve any prospectus that on the bonds available in the market, and there are several bonds available. So yes, you can go to the CBK website and check on that. Or if you now have the new DAO CSD system, you can activate notifications on the account settings. Just go to your account information, account settings, and then on the account notifications under the settings, go to the auction. There's an option where you activate auction either via email or SMSs. That way you get notified whenever there's a new bond or bill, whether you want to have it on email or SMS. So that's how you receive a prospectus, in terms of a link where you open and you get all the details that you need to know about a particular bond. So what are these details that are contained in a prospectus, and why do you need to know? You see, every now and then I get questions on, okay, what bond is on offer, how much is the coupon, when is it maturing? All those details are always written in the prospectus. So you just need to get that document, and you can always download it again and again to get all the details. So some of the information you'll get from the prospectus is the name of the bond, that is the issue number, the duration of the bond, the coupon, the issue dates, when it's opening, when the auction is opening and when it's closing, the maturity dates, the coupon payment dates. All that information you'll get in a prospectus. So let me take you through a prospectus so that you have an idea of how it looks like and what exactly you need to look out for. So here is an example of a prospectus. This one is issued by the Central Bank of Kenya. Remember, the bonds I talk about are bonds issued by the government. We also have corporate bonds which are issued by other corporate institutions, but this one is from Central Bank of Kenya. So prospectus for Government of Kenya, this one is a 9-year amortized infrastructure bond, IFB, and 2-year fixed coupon treasury bond. So yes, we can have one or more bonds issued at a go in any month. The name of the bond is here, issue number IFB 1 2016-9 and issue number FXD 2 2016-2. Remember, when you're reading the name of a bond, this one indicates it's an infrastructure bond. This one says it's the first issue. The 2016 is the year in which it was issued, and then it's a 9-year bond. An FXD, it's not an IFB. That means it's taxable. It's the issue number 2. It was issued in 2016 and the tenor is 2 years. Then you come here, we have the total value that the government is looking to buy and the month and the year when this bond was issued. When you come to the next page of the prospectus, here we have again the issue numbers, the name of the bonds, IFB and FXD. Then we have the issuer. The issuer here is the Republic of Kenya. We have the amount, which is 30 billion. This one you don't really need to remember as a retail investor. The people who use that information mostly are the big time traders who need to know how much the government is borrowing, and that will really influence on how they are bidding. Then if it's an IFB, most of the time you'll be given the purpose of the bonds. Like in this case, it's to finance projects in the following sectors. IFBs are mostly meant to do specific projects, but the normal FXDs, they are usually mostly for budgetary support. Then you have the tenors here, which is a 9-year and a 2-year. Then you have the coupon, which you need to remember. The first one is an IFB, a 9-year, which is at a coupon of 12.5% per annum. Remember, a coupon is always quoted per annum. Then we have the 2-year, which is market determined. That means it's an auction, and the coupon rate will be determined as per the demand and the rates at which people are bidding, and then central bank will arrive at an average rate that will be applied to everyone as a coupon. The period of sale is also very important. You get to know the duration when that bond is open. That means in this particular case, from the 6th of May up to 17th, that is when it closes, after which you cannot place a bid on that particular bond because it will have closed. After that, it's either you wait for a reopening or you go to the secondary market to look for it. The value date is the date by which you need to make your payment. So if you notice this is the date when it closes. Then the auction date is usually the following day. Remember, it's an auction like any other auction. And then the settlement date will be, it's usually communicated here, and it will also be communicated on SMS or email, the date by which you need to make your payment. The minimum amount, you'll also get that. It's usually 100,000 for IFB and 50,000 for the FXDs. Also, the interest payment dates, very important, because sometimes you want to remember when you're expecting your coupons. For the 9-year, please note that all these dates are indicated. The exact dates on which you're receiving your coupon from the first one to the last one are usually indicated. On the 2-year, they're just 4 coupons. Remember, coupon is paid every 6 months. Then we have the redemption dates. That is for the 9-year, it will mature in 2025. For the 2-year, matured in 2018. The taxation aspect for the 9-year being an IFB, tax-free. For the 2-year, 15%. That is withholding tax rate. Also, amortization proportions, and this applies mostly to the infrastructure bonds. Like this particular one, you can see that it has a structure. That means for the bond, for any amount that you buy, it will not take the whole 9-year term. There'll be amortization. 22.725% will be amortized, will be paid back. 22% of the principal will be paid back. Then on the May 2021, then on 15th May, you'll get back another 29% of your principal amount. Then on May 2025, now you get the full amount. The coupon is dependent on the outstanding principal amount. Please note, this mostly applies for IFBs. That is a note that for any outstanding amount up to 1 million per CBS account, the full amount will be redeemed in full during the first batch. So this information, you'll get all this information in the prospectus. But for the normal bonds, you'll find that the maturity is up, like this 2-year. The full maturity will be at the end of the 2 years, which is from 2016 to 2018. So you'll just receive these 4 coupons and then maturity in 2018. If we come up here, some information, terms and conditions, the ones that we don't read, some of them, they are here. And what you really need to note, some of these, these are the placing agents. What you need to pick from here is something like this: non-competitive bids. I keep talking and telling retail clients, please, when you're bidding, go in for non-competitive bids. The competitive bids are usually done by big-time retailers. If you're doing anything over 20 million, you're required to place a bid. I had explained on my previous videos that if you're going in as a retail client, just go in non-competitively. Do not place a rate. If you're doing more than 20 million, then you're required to place a rate. This means it's an auction and different rates go in, but remember, it's the average that is usually determined as a coupon rate. So as a retail investor, just go in because you risk missing out on a bid if you go way too high. If you go way too low, you miss on getting paying a premium on that amount. So if you're not sure of what's happening in the market, just go in non-competitively. This is the bid closure, the date in which you must have submit your bid. The auction date is usually a day after the auction closes. Remember, the auction close dates are usually here, open from here to here. Then the results, which will be announced and communicated to you after the auction closes. I keep getting the questions of what will happen if your bid is successful and then you don't pay that bid. Now, this is what happens. Defaulters may be suspended from subsequent investment in government securities. You don't want to risk that. So the first, second time, maybe nothing will happen, but if you keep doing that, you can easily get suspended from bidding in future government auctions. Rediscounting, there's something we'll call rediscounting. I had mentioned that it is hard to sell a bond. It's not the best thing to do, but if you're really pressed, you can look for a buyer in the secondary market, or you can do something called rediscounting, that is selling the same bond back to the government. Of course, you will lose out some principal amount, which is like 3% above the market yield, coupon rate, or whichever is higher, upon written confirmation to do so from the NSE. This here, where you see upon written confirmation to do so, becomes a process, becomes a procedure, and it's not as easy. It's designed that way to discourage any selling of bonds. So you're meant to hold your bond to maturity, especially for retail investors. But for the big time investors, the one who keep purchasing 100 million and billions, those ones trade. They can sell and buy and sell and buy. But for the retail investor who is buying less than 20 million, it might be hard to sell your bond in the secondary market. And it's designed that way on purpose. The rest really you may not need to know, but you can see here the secondary trading is in multiples of 50,000. And the date on which you can start trading is over here if you are a trader. But what I talk about is about bonds, retail, passive investment. So you don't need to trade that bond. The main thing you need to know from a prospectus as a retail investor, a passive retail investor, you don't need to know the issue. These bonds are by the Republic of Kenya, not unless you're buying a corporate bond. You need to know the purpose. That tells you whether it's an IFB or an FXD. Remember, the IFB is tax-free. The FXD has a tax element, which is explained here. So you need to know the tenor of the bond, how long they are, so that you know how much you are putting your money, 9 years or 2 years. The bonds can be anything from 2 years to 25 years or more. You need to know the coupon. If it's market determined, then you'll know the rate of coupon after the auction is over. If it's already determined, then that coupon remains. Please note that if it's a reopening, we already know the coupon. So even if it's a reopening and floated in a new auction, the coupon is already set. The only thing that will change is the yield, and I'll come to that. Then you need to know the minimum amount so you don't end up bidding 50,000 for an IFB and wondering why it didn't go through. Then you need to know the interest payment dates. Pesa inaingia lini. Please note that this money is usually paid on time. So note the dates when you expect all your coupons. And I love the fact that the new DAO CSD system is able to alert you on incoming coupons days before. And when they are paid, you're able to see it on your app, the DAO CSD app. And then the redemption dates, when you expect the maturities and the taxation bit. And if there are any conditions like the amortization proportions, and that is in IFBs. Otherwise, the other FXD bonds, you just need to know the maturity date. So basically, that's what you need. Those are the main details that you need to know in any bond, and that is what you should be looking out for. Now, there's this table over here, and I'm getting question on what this table is about, the yield and the price. Now, we have two rates mostly used in the world of treasury bonds. The coupon is fixed Once the market determines the coupon, then it's fixed in its entire life. But there's something we call the yield. That is a rate that is used in the market that keeps fluctuating. It's a rate that changes every now and then. Now, whenever you have a bond issued, after it closes, it trades in the market through a rate called the yield. Where it's important when there's such an auction, because on this particular one, we have the I infrastructure bond, which we already know the coupon. The coupon is right here at 12.5. That's the coupon. So any rate, if you go in for that auction, any rate at 12.5, you'll pay 100. That is for every 100,000, you'll pay 100,000 shillings. If you go in for the competitive bids, please note, if you go in at above the coupon rate, then you'll pay a discount. For every 100, you pay less amount. You'll pay 97. If you go in at a lower yield, then you pay a premium. You pay more than the 100,000. Let's say if you're bidding 100,000 for this one, you'll pay 100,000 and maybe 102,000 or something like that. You'll pay at a premium if you put a yield which is lower than the coupon. The yield applies mostly in the secondary market. You as a retail investor, what you really need to focus on is the coupon, because that is the rate at which, the return at which you'll be paid throughout that bond. So as a retail investor, don't be too worried about all these numbers I'm talking about. Just focus on the coupon rates. And these coupon rate will be communicated after the auction closes. You'll be told what's the coupon that the bond came out at, and the amount to pay. So if you're paying more or if you're paying less, depending on the factors, depending if it's a reopening, if the yield is higher or lower than the coupon, the information on the exact amount that you're meant to pay will be communicated to you via SMS or email. So don't worry about all these numbers. So now we know how to read as prospectors and the information that we really need, how to filter the information that you need for any particular bond. But not to worry if you can't grasp all that. I do monthly updates on every prospectus. I teach you on what bond is available and the details that you need to know. Just make sure you follow my pages on bonds on social media. That is TikTok, Facebook, and Instagram. Angie on bonds, and I'll keep updating you as we receive any new bond or prospectus. I am now available for one-on-one sessions on Treasury Bonds advisory for individuals and groups. If you're interested, kindly get in touch on angie@angieonbonds.com or on this number 0106 726868. That is 0106 726868. And let's talk about bonds. Remember, if your money is not making you money, then your money is losing you some money.